Hi everyone, hope you're all doing well, and today we're going to go through some of the big stock market mistakes that I'm seeing going on right now, and hopefully we're doing a bit more of the education videos, and hopefully this helps you right now with what's going on in the stock market, since it has turned a little bit more choppy over the last 2 weeks and has started to move a little bit more in the other direction rather than just going up all the time. So yeah, we'll take a look at all that. Sorry about the video being slightly later than normal. The reason why is I've just been really focused on buying some companies. So yeah, if you do want to know what companies I'm buying, make sure you join the Patreon, links in the description. And if you do want to start buying some shares, there's a link to a free trade account. You join through there and you also get a free share as well. But yeah, obviously I kind of revealed there that at the moment I'm kind of very busy looking at companies and trying to take these opportunities on these dips and trying to buy a few companies. But at the moment, there's a lot of mistakes going on in the stock market, and hopefully these education videos really help to get the correct mindset that you should have in the stock market right now. Obviously, the stock market has been very generous over the last kind of 12 months. You know, we've had a stock market which has gone up 60%, and we've never had a stock market over the last 12 months that has gone the other direction. You know, a lot of maybe the new investors haven't really known a stock market that actually has a few red days, a stock market that maybe has a bit of a correction now and then, which is always healthy for it to happen. So I don't know what some of these guys that are like, I actually saw a post the other day and it said, when's the stock market ever going to go up again? And I was like, the stock market's only gone down like 2 weeks. I mean, I don't know what they're going to do if we have a stock market full-on correction or a stock market crash, or the stock market literally does nothing for a year. Like I think it was either 2017 or 2018. I remember the stock market literally did nothing for 12 months. It just flatlined. So I don't know what they're going to do if we ever have that scenario, or if the stock market went down for 12 months. I think they'll really struggle to go with that mentality, and I think that's unfortunate. Like the thing that I've been saying over the last 12 months, like people have just got in the head, like the stocks just keep going up and up and up. And you've just seen like the confidence and like people just taking risky bets, and it's just kind of like the reality of a stock market that actually goes in a different direction to just up is kind of kicking in. And these are some of the mistakes that I am starting to see out there in the stock market. And I know some of you guys will have like an amazing stock market mentality now, but I know some people might stumble across this video and maybe it'll be very useful for them as well, or maybe even just one tip you might pick up and it's useful for you. So if you could smash the like button, you know, let's try to get above 300 likes. But the first one is fear the dip. So like I say, this is one that I'm seeing on a lot of like different, maybe some video comments, maybe some on some like forums and stuff. People say like scared of a dip, like, oh, like why is the stock market down again today, or when's it going to stop going down? And if that's your mentality, that mentality needs to switch to don't fear the dip. The dip is nothing to be scared of. In fact, dips are great things in the stock market. It gives it a healthy correction and makes some really good buying opportunities. And generally, like, yeah, I get, you know, obviously I invest because of the stock market to go up, and I enjoy the stock market going up, don't get me wrong. But at the same time, if a dip happens in the stock market, I'm not like, oh no, I don't want it to dip. Like, I'm like, bring it on, go lower, keep going lower. Like right now, I'm just like, if the stock market can go down another 5%, 10%, I'd love it. I'd love it to go down. And in the last few days, like, no emotions have changed in my point of view. In fact, I'm a little bit happier. We're getting to some better valuations and some deals are starting to appear in the stock market, and that's the mentality to have. You know, the thing is, being scared of a dip isn't going to get you anywhere, because the thing is right, I think most of you guys would have been involved either pre-March or probably got involved in the stock market in March. And the thing is if you bought in the March dip, like the stocks that you would have bought in that March dip are probably up a lot of percentage right now. And that's the benefit of a dip. You buy in the dip, it's easier to make money. You know, sure, the next kind of 1 week, 1 month might be a little bit choppy, but if you're an investor, you're not investing for what's going to happen in a week or a month's time. You're investing what's going to happen years down the line. And that's what you got to remember. You know, it doesn't matter what the stock price is doing now. It doesn't matter what it does next week. You're trying to think about where the stock market's going, this stock and company is going to be in a few years' time. And if you're buying on a dip, you probably get the better advantage of making more money on the dip, just like March time and before. I think the stock market, the last other dip it had a while ago, I think it was like 2017, 2018. And once again, I think that was like a nearly 20% dip. That was a really great time to buy and make money. The thing is, the fear of the dip, you want them to happen. It's the easiest time to make money in the stock market. So yeah, don't worry about what's happening. You know, those are the best times to be buying. And that's what I see quite often. People scared of like, oh, it's another red day. Oh, this stock's down so and so now. So what? You know, buy the company, average in, and you're investing for the long term, and you'll see the benefits on a dip. So yeah, first of all, like if people have the mentality to be scared of a dip, don't be. Like the best times to buy, 100% for sure. Now the next big mistake I'm starting to see as well is people like, oh, I'm going to sell this stock, I'm going to sell this stock, and they think, oh, you know what I'm going to do? I'm going to buy in a week time when the market bottoms. Like, I'll be honest, the time to be selling companies has kind of gone. Like, you could have, a lot of companies that you might sell now, you've probably been able to get a lot higher prices a few weeks ago, and that's the time, you know, when the stock market is going up and up and up, that's the time to think about selling. When the stock market's going down and down, that's the time to be buying. You do the opposite to what the stock market's doing. And when the stock market was greedy, that's when you should be selling a couple of positions, maybe trimming a couple of positions. You know, the other day, like I was saying, I took a bit of a trim on Beyond Meats because it had just gone up too much, even though I love the company. Next thing I know, the stock has a 30-40% correction. I can get back in and I made a nice profit. And that's the kind of mentality that you want to be running. And a few things that I'm seeing is that people try and time the market. So I'm seeing a few people going, right, what I'm going to do is I'm going to sell out my position here. I'll wait for the stock to go lower, and then when it starts coming up, I'm going to buy it, and then I'll, you know, basically be at the bottom, and I'll get all them gains coming in. Never works. Never ever works. Because what would have happened, let's say the other day, I think it was last week, the stock market dipped on Thursday. And then the next day, I think it was either Friday or even Monday this week. I can't even remember what days they were. But the stock market like rebounded, like every stock rebounded like 5-10%. Now, if you sold out and then you wanted to buy back in, you would have totally missed the lows and you would have been even worse off. And that's the thing, like people are trying to like worry about, you know, maybe I can sell out this position and buy back in later and maybe save about a 3% dip. Don't do it. Don't do it. You know, the thing is just buy it, hold it, average, and wait for them gains to come in. Because I tell you what, the chances of you timing the market perfect are very, very slim. Don't get me wrong, one time you might get it right, the other 3 times you'll get it wrong. And that's the thing, you know, don't worry about, as a long-term investor, don't worry about, oh, I want to try save myself on that 3% dip or anything like that. Like, you know, I always say on the Discord group, you know, it's not about timing the market, it's about timing the market, and that's the big thing you want to be doing. Next up, buying bad stocks. I was going to put a worse word than that before, no, I couldn't. Now, over the last kind of, I would say 3 months, what I've seen right there is a stock market mentality where the stocks just keep going up and up and up. And as stocks keep going up and up, people kind of get this godlike mindset where they're like, okay, literally anything I buy in the stock market will be going up 10% next week or anything like that. And people think they can't choose a bad stock. And what has led to in like the stock market scene, and even on the YouTube scene, I've seen so much over, and I've been very clear about this over the last kind of few months, is that I've seen an attitude where people have just gone, okay, I don't, it doesn't matter if they've got a bad balance sheet. Okay, it doesn't matter if they're not going to make revenue for the next 2 years. You know, buying companies that just have so many negative things that go on, but knowing, because we're in a stock market that just goes up, they're going to make money. There's a bit of a reality check now, because some of these companies that, you know, people have this godlike mindset. Now the stock market's downtrending. You know, where's the market's down? Maybe, you know, 7, 8, 9%. Some of these horrible companies have totally dived. I'm not going to name any because sometimes people get offended when I say some of these stocks. But there's some of these like really crappy stocks that people have been really hyping up. And you've seen like, okay, now you're in a bear market. Now we're in a market that downtrends. And let's not forget, we've only had 2 weeks of this. You know, imagine if we had like a full 6 months, a year of this. Like imagine what these companies and these stocks would be like. They're a bit awful. People lose money. And I've already seen like some of the stocks. So there's one stock that I'm seeing everywhere at the moment. And literally, I think it's lost half its value in 2 weeks. And that's the thing when you play some of these stocks. And this is a reality check. Like some people might got involved in some of these bad stocks. And now they're kind of getting the reality check of like, okay, that's why we should buy companies that have great balance sheets, profit growth, revenue growth, and buy them. Because they're all, you know, you can take them risks in a bull market and it looks absolutely amazing. But I tell you what, next week, if it snaps back and we have a pullback, you know, you really get stung by buying them sort of bad companies. And yeah, there's definitely one that I've seen that's absolutely fallen off the cliff at the moment. And that's the problem. You know, I've seen so many people that basically, you know, say, oh, they say like, oh, this might happen next week, so it might go up 100%, and it's like, it's unbelievable, like what some of these stories about why it's going to go up, and it's just, it just blows my mind. Like there's just no like look into it or analyze what's going on with the company. And yeah, I think some people would have had a reality check of buying stocks that have just a story, and sure, they look great in a bull market, but now we've had a market that's, and this is only for 2 weeks, come back a little bit, look at some of these stocks that are getting stung. There's some really bad companies that have had a reality check, and hopefully you weren't in any of them companies that have had a bit of a reality check over the last kind of few days, maybe a few weeks. Next up, first of all, okay, we've got a dip. Always great to buy in a dip, okay, but the worst thing you can do now is you go all in on the first dip, because what happens sometimes is that we don't know, we might be entering, people always ask me all the time, like, what do I think this stock's going to do next month? What's it going to do next year? And you generally don't know, okay? In long term, I can guarantee great companies will go up in share price, and the stock market will go up in the long term. What I can't guarantee is where the stock market's going to be in a week's time, where it's going to be in a month's time, maybe even 12 months' time. I can't guarantee where it is. And the first thing is like, you think, oh, I've got to buy the dip, and you go buy on the first dip. And what happens if we have a dip that takes it 5% lower, 10% lower, 20% lower? What happens if we have a stock market which does nothing for 12 months? What happens if we have a stock market which goes down for 12 months, and you go all in the first dip, and you're like, okay, I've got no more cash for the next 5% drop, 10% drop. I have no more cash for a bear market. Like, just be careful. Like, always best to kind of average in. I've seen a few people going a bit too in, like, okay, I've got no cash left now. And that's something you want to be really careful of. The next thing as well is no cash. I've seen a few people as well that have no cash on the sidelines. If you've been on my channel for a while, I have had 30% cash for probably the last 12 months, and probably a bit before that it was probably 25% cash. I've been above 20% cash for a very long time, and I've always been there that I'm like, okay, valuations are getting a little high, slow down the buying, do a little bit of trimming, keep a nice cash pile, and then I can take benefits if the stock market drops. But because the stock market is dropping now, either some people are going all in and then having no cash, or they've been carried away in the stock market. The valuations have just gone out the window the last 4 months, and gone, I'm just going to keep buying because everything's going up. And then we have a dip, and like, oh, I can't buy anything because I just kept buying at really high valuations, and people have run out of cash. That's something that to take a lesson from. It's always good, even whatever's going on, always have a bit of cash. And then when we start getting to an overvalued market, which I've said for the last kind of couple of months, the market's getting quite overvalued, at least get to 20% cash, because if we get to this scenario, you won't be able to take advantage of it. So that's something else. And that kind of ties, the last one kind of ties with, I guess, all of these points really, but I kind of touched on it a little bit earlier. Buy for next year, not for next week. Like, I've seen people going, oh, this company might find a unicorn next week, so they're going to go up 100% in value. Like, I'm just seeing so many daft stories like coming out about why something's going to go up in value in the next week, but that's not how it works. You're investing, you are buying companies, you're looking for companies that have revenue growth, you're looking for companies that have good profit growth or are going to get to profit and grow profit. You're looking for catalysts like, oh, I like this company's going to do more revenue because it signed this contract, or it started operating in this country, or now it's doing this service to what it already does. You're looking for when you're investing into companies, you're like a bit of a detective, and you're trying to find companies that are going to do profit and revenue, and that will leave the share price to go up. And you're also looking for catalysts of why the profit and revenue are going to go up. And realistically, the things that you look for in great companies won't happen next week. It'll take a few months, years for them catalysts to come into effect. And that's the thing. Like, I see so many people, especially over the last 2 months, like I've seen some of the companies I've been seeing talked about are just so awful. And I'm like, don't get caught up about what's happening at the moment. Your mentality should be, okay, where is this going to be in 2 years' time? Where is this going to be in 5 years' time? And that's the main thing. Like, I'm seeing people getting hung up. Like, I think some people have been sold this, or maybe because they've just seen what the stock market's done over the last few months, where it's like this get rich mentality, get rich so quickly mentality. And that's not it. You're investing in companies, like, that does not happen. Don't get me wrong, you can get rich, you can do it, you can make money, great money on the stock market when investing in companies, but it's not going to be over a course of a week. And if you can't handle, buying great companies and just letting it sit there for the next 1, 2, 5 years, then the investing game isn't for you. You are buying companies and you're waiting for them catalysts to come in and take the company and share price up. And I think quite a few people have been caught in the mentality that they can get rich quickly overnight by buying X, Y, and Z stock, and that's not it. You want to be having a game plan of like patience is the big thing. Having patience in the stock market is the key thing. And if you've got patience and you can just buy it and then go, right, I'm not going to think about it for the next couple of months, that's what you need. And patience is a key thing. And if you've got good patience, you'll do really well. So yeah, I just think it's quite funny over the last kind of maybe last couple of weeks, because you've seen so many times like the people that have been caught now we've hit a bear market, they've kind of gone, I've noticed on even the YouTube scene, like the amount of like spec stocks that have suddenly started slowing down now, that have gone, oh right, so this is what happens when the stock market goes down. Like it's been such a reality check, I believe, for some people, but for some people that was positioned in the right way, had the head on, had these things running through the head, I'm sure are really benefiting right now. And just like how we go back to March time, if we went back to March time, so many people, long-term investors, definitely benefiting from that right now. And this could be once again something that we benefit from maybe next year. And you go, right, I'm so happy I bought some great companies in that dip, averaged in, and now I'm getting the benefits. And it could be a repeat process of where we were at 12 months ago happening again right now. So yeah. Hope that video was a little bit useful, and hopefully there was something information that you might picked up, or maybe even if you kind of had that going anyway, maybe it was just a good kind of a refresher course to maybe just keep that mentality going and keep doing what you're doing. So yeah, hopefully it was useful. If you could smash the like button if you did make it all the way to the end and you knew, maybe subscribe, and I'll see you next video.